Good morning and welcome to another edition of the Ashworth Weekly Market Update. We are excited to have you here with us today. We have just a little bit of information. Actually, we've got a lot of information going on, but we'll focus on just a little bit here. So last week we had a fairly strong week. The week before we had a fairly strong week. Most of that is coming from the fact that a lot more investors now are considering that they feel like the Fed is done raising interest rates and that things should be able to progress forward. Projections on a potential recession have also moderated just a little bit. But even with that, we have, as always, we have cross currents that are going through the market and things that bring us back a little bit more to reality as far as what's actually going on in the marketplace. If you look at our slide today, it's talking specifically about the jobs market, and with the jobs market, we have about 90% of the S&P 500 companies that have reported so far. And year over year, we have a good result of about an increase of about 4.5%. But if we look at the trend with quarter over quarter earnings per share, we're down about 3.8%. There are a lot of projections right now that are projecting consensus estimate for earnings per share in 2024 to grow roughly about 12%. JP Morgan has a little bit more of a bearish look on that, and they're projecting that earnings per share will probably be in the low single digits, prompting probably a little bit more further downside on the economy and what's going to happen with the higher interest rates that we have right now. And so we look at the jobs market. Everything is really keyed in on the jobs market right now with what's happening. There's a thing called net pricing plans that basically just says what the corporations are pricing in for goods and services, also what they have to pay for labor. And the revenues have held up fairly decently with regards to that, but we are seeing some turning to where some of that may start to become negative, turning to cost, weaker growth, weaker demand. And so we're seeing a little bit of a moderation in the market strength, a little bit of moderation in the job strength with the jobs report. So right now, about 43% of the firms still are unable to fill positions. So the thought process there is that if they're unable to fill positions, they're going to have to raise wages to be able to attract labor, which is inflationary. But we believe that there's enough moderation in the market right now that should offset that. And long term, again, just looking at everything as it goes forward, we feel like that the market is getting through most of this. We'll still see a little bit of choppy waters going in the near term, but we believe that over the next year to year and a half, we still should see some fairly good growth in the marketplace. And with that, thank you so much for tuning in today. If you have friends, family, or neighbors that you feel like could benefit from our weekly market update, please feel free to forward our link. And thank you so much for joining us and tuning in.